And so it's just fun to teach people something that they don't typically know or hear about.
Yeah.
A self-directed IRA has been around for 40 years, but most of America had no clue.
Yeah.
And so we get to teach something different.
Welcome back to another episode of Keeping It Real Estate. I'm your co-host, Dan Brisse. Today we have Greg Herlean joining us on the show. Greg is a seasoned real estate investor, self-directed IRA expert, and founder of Horizon Trust. So with that said, Greg, welcome to the show.
Thanks, Dan. Thanks for having me.
Yeah, you bet. So I heard your story. We're in a mastermind, a kick-ass mastermind. I heard your story. You spoke a little bit, and you've got a lot of real estate experience. And I'm just curious, for the listeners, what first attracted you to real estate investing, and maybe some early lessons from your initial deals that really shaped your approach today?
Yeah. So look, I started when I was 23 years old, and so when I started, I knew I wanted to be in real estate, particularly just because the way people lived that were in real estate. Like, I didn't know exactly what it meant to be in real estate, but I saw how people lived, and in particular, people had boats. I know that might sound silly. I didn't grow up with a boat, right? Parents were home during the day. Never saw my dad during the day. All these little things. So for me as a kid and growing up, I saw some commonalities of what the successes they had in real estate. Didn't really know what it meant exactly. Just knew they were in real estate, right? And so truly, that's why I got involved in real estate at 23. I was like, I'm going to figure it out. But I learned a little bit of the hard way right in the beginning that you could find and educate yourself all day long on great real estate. But if you don't have the money, you can't get the deal. And even to this day, I get a little bit frustrated because I'll hear people talk about real estate and they'll say, oh, if you find the right deal, the money comes. I think there's a caveat to that. I think the money comes if you've done enough real estate that you've got relationships, then the money comes. But for a lot of people out there, when they first start in real estate, you can read all the books, you can do all your due diligence, find the perfect deal, but a bank's not going to lend you, or you're not going to get the equity, or you have no equity. I wasn't raised with money. I didn't have money. So my early years of starting was actually trying to understand where the money was at and how to get to it. And that's actually what, a little bit, it'll transition to what we're talking about today, but that's truly, my lesson learned early on was getting in the right rooms and finding the money for the deals.
Got it. Yeah. So you started when you were 23. If you don't mind, how old are you now? How long have you been doing it? I'm not sure.
I've been in the real estate game for 22, 23 years. Yeah.
Wow. Okay.
Yeah.
So I want to go down this path because what you're saying is totally true. You might have the best deal in the world, but without a track record, without, investors that trust you, they're going to look at you like, why would I give you my money? I can put it hundreds of other places. Okay. So you started investing when you were 23. Horizon Trust started in 2011. So there was a period of time. What were you doing when you first started before Horizon Trust started?
I was buying and selling. I was flipping deals in Las Vegas. That was one thing I was doing. And then I also got into the hard money lending business. So I raised hundreds of millions. I raised a little over $1 billion in hard money loans. And so I did that for a period of about 8 to 10 years. And wow. I just got really good at raising money and talking to people with money. And that's what I did. And I did it really well. But 75% of those funds that I raised for for hard money loans were monies were coming from qualified funds, from IRAs. So that I was like learning all about the soon to be trust company. I didn't think I was going to create a trust company. I was a hard money lender. That's really what I was. I was good at it. And I didn't ever want to be in the trust company business. But I was by default. Because every time we would send out a flyer to investors saying, "Hey, here's our next deal," we had to raise, $1, $2, $5, $6 million per project, and we'd go out and say, "If you have an IRA, you can invest in this deal with your IRA." It just so happened to be that we really marketed hard on that, and so every time someone raised their hand and said, "Hey, I want to use my IRA to fund or invest in your deal," I had to introduce them to a trust company and say, "Okay, cool, get your account set up. Once it's set up there, you can invest in this deal." And so I was referring people literally thousands of people to 2 different trust companies. But what would happen is these trust companies' service was so terrible and it took so long. And time was my biggest issue, right? I have to close on a deal, right? In a couple of weeks. Well, these trust companies would take sometimes months before they get the accounts funded. So I lost investors, lost deals. And so, after you do that several times over many, many years, I finally was like, look, I'm just going to start my own trust company. And so
Wow.
that's how I got into the trust company business. But I was a lender. That was primarily what I did. I did my own deals. I flipped some deals, did some apartment deals, got beat up 2008, lost everything because I was all in, right, in real estate in 2008. And so I learned a lot, but I also learned, a lot about money in real estate.
Wow. Wow, that's awesome. So 2011, you start Horizon Trust as a self-directed IRA custodian, right? So investors have IRAs, and if I understand correctly, because we have a fair amount of IRA investors, just like you were doing, what's what we're doing now, right? We have investors who are looking to invest in multifamily deals. They want passive income. They want to have the money multiply over a, 5 to 7 year period. So what is it that you guys do specifically at Horizon Trust for IRA investors?
Yeah. So Dan, what we do is the first thing I say we do is we educate and introduce the subject. Most people, first and foremost, don't even know that they can use their old 401k or the retirement account to invest in real estate. That's just and if they do think they can do it, they're mostly wrong because they think they can do it through their financial advisor. Like, oh, they're buying a REIT or something big, right? Or a fund or Blackstone or so, something like that. But that's not what I'm talking about. The first step that that individuals need to know is you can use your retirement funds, IRAs, traditional, simple SEP, Roths, old 401ks. You can use those accounts to invest in real estate. And it can be as simple as a note. It could be in a syndication and a multifamily deal for any dollar amount. As long as the investment that's accepting it will take that dollar amount. Could be $50,000, could be 100,000. And so that was the first step is we at Horizon Trust introduced the subject because that's just new, even though it's been around for 40 years. After that, we then teach them really the basics about how it works and how to get their account set up, how to get their money transferred over. And then we kind of walk them through and hold their hand through the process, getting their account and money set up at Horizon Trust. Once someone raises their hand and says, I want to put my money in real estate, let's say, or Bitcoin or precious metals, as most people are doing real estate. Once they say they want to do that, we help them fill out the documentation to get their money transferred over from wherever it might be over to us at Horizon Trust. That takes somewhere between 5 and 10 days. Once it's there, then the next step is we help them facilitate on getting their monies sent to the investment of their choice. We're not advisors. I will never solicit and or market nor my company on where to put your money, but that's being the case, you would tell us, hey, like if Dan, it's your Roth IRA, you would call us and say, hey, I want to move my Roth IRA into this multifamily deal. You would provide the documentation to us, and then we, on your behalf, will send the monies to that investment. And so that's what we do. Again, first step is education. Second step is really teaching people the process, getting their money set up. Third step is taking action, investing their money in an asset class that they like.
Got it. So when people reach out to you and they don't have a self-directed IRA set up, the 5 to 10 days, what are some things that are going on during that 5 to 10 day period that it takes 5 to 10 days to get done?
Yeah, but really, we only need about an hour to do all of our work to get the account set up. The 5 to 7 days is us hounding and following up with where the money's at to request it to come over to us. So just like anything, right? No one's excited to send their money away from their institution. So in this example, Dan, like if you set up an account with us, which we'll set up in an hour with an account number, we then you'll fill out, you sign these documents that basically gives us the right to go request a portion of your money. You can move it all over or a portion of your money from your retirement account over to your new retirement account with us. So we take that form that you sign, we send it to, let's say you're at Fidelity. Hey, Fidelity, Dan is requesting that you send us X dollars to us. Fidelity gets it, and this is where the time happens. They might call you, hey, are you sure you want to do this? Your advisor might call, hey, I noticed you're moving $50,000 to Horizon Trust. Or they might say, we're going to send a letter to Dan first, and he's got to sign our letter before we release the money. So that process of releasing the money is 5 to 10 days, depending upon which company it's coming from. We're really good. The difference between us and our competitors, when I say we're really good, is we call your company that you're taking funds from, we call them every day, if not every other day, on your behalf. Hey, how's the transfer coming? That's one of the biggest difference that we do compared to our competitors. Our competitors will send the form requesting the money, and then they sit and wait for the money. And then sometimes the company doesn't even acknowledge that they got the form. We've got to resend it again. Some will say, oh, we need you to sign this additional form from our company before we release it. So we say, send us the form right now via email. We're going to get it to Dan today to sign. So we just speed things up. So that's what's happening in those 5 to 10 days. It's just a process before these institutions will send or release money over to us.
Wow. So, with Horizon Trust, you guys now, if my numbers are correct, you guys have processed more than 1.4 billion in alternative asset transactions. What have been your biggest levers that have allowed you to scale to that milestone? Because that's a pretty dang big number.
We've been doing it for like 15 years. I mean, I've been doing it 23 years, but I would just say what's enabled us to scale our business is our service and speed. We're still small. There's not very many of us in the country. We're probably in the medium size as far as in the industry goes. But what's enabled us to scale and grow is it's almost all of our business is via referrals. And we get referrals every day. Literally, I get texts and emails. Hey, my buddy wants to invest with me. Can your team call them today? I mean, we do it, real time, same day. And so what's enabled us to scale is really our service. We're fast, and you can always get a hold of us. And so we're a boutique firm. I got into this business with no money. I understand real estate, I understand IRAs, and I'm really good at a few things, but that's about it. And this happens to be one of those things. And so it's just fun to teach people something that they don't typically know or hear about. A self-directed IRA has been around for 40 years, but most of America had no clue. Yeah. And so we get to teach something different.
Yeah, it's awesome. How many team members do you guys have at Horizon Trust currently?
We have about 50. There's about 45 or 50 of us.
Got it. Good. So what would be some of the downsides or what are the risks? Like if I'm new to this and I'm hearing, oh my gosh, there's this whole new investment vehicle that I can use with my IRA. They've been putting their money in, their 401k, they've been putting their money in, conservatively saving, stacking it up. And now they're hearing this podcast and they're thinking, wait, I can invest in alternative investments. I can get into cash flowing real estate. What's the downside? Is the risk anything on your end, or is it purely the risk of deciding what investment is going to produce the best return?
That's it. The risk is not with us. The money's insured up to $250,000 per account, that we hold. So, if that, I guess that's not even, I wouldn't even consider that a risk. Our money is held with, institutions, the main institutions of the world that are FDIC insured. So the risk that you have is investing in the investment that you invest in. So once you tell us to send that money to a multifamily deal, or cryptocurrency is a great example. Like my son loves to use cryptocurrency. It's his era. That's who he is, right? And he's made money on it. I am certain every time I bought it once. Actually, that's not true. I bought it twice. Once I bought at the peak and sold it at the low. And the second time I still have it. It's up. So it's good. But like you're risking where you put your money. This self-directing is not for everyone. Only 5% of Americans do it. And I truly think only probably 15% of Americans should be doing it. Everyone shouldn't be doing it. And the reason why everyone shouldn't be doing it is because you got to spend a little bit of time understanding what you're investing in, who you're investing with. When you invest with a financial advisor or a fiduciary, it's their job to do the research, to analyze the investment. And most people that invest with a financial advisor don't really do anything, right? They send them money and hope and pray that the statement comes back bigger every quarter, every year. That's the model. It's regulated. They've got someone advising them, someone looking at the investments. This is an investment type class, alternative asset class, that you do your own due diligence. For example, if I'm investing with you, Dan, I'm doing my due diligence on Dan. and his company and who they are. And if I'm not willing to actually read the documentation and know who I'm investing with, I'm not the right candidate that should be investing in alternative asset classes. I love real estate. And I also have learned the hard way that I like to invest in the people and not necessarily the deal or the pro forma. Every pro forma is great. I've never seen a bad pro forma. But what makes the pro forma is the people behind it. So I used to go, after the 20, 30, 40% rate of returns, right? That was sexy. Looks really good. Pictures are good. But when you're with the wrong, manager, wrong developer, general partner, it doesn't matter what the paper says. You're risking your money. So I would say that's the long answer to your question, but that's the risk, is knowing who you invest with. But it's also the exciting part. Like, I love, like, now I'm on the other side of it. When I first started, I had no money, and people used to lend to me when I was 23 to do deals. Now I get to lend. I get to partner. I'd be like, look, you find the deal, you take care of it. Just pay me my pref, a percentage of the upside, and I'm good. And I want them to succeed. I want them to crush it. But I get paid typically first, when I'm lending my money from my IRA to somebody else. It goes back to my IRA. So yeah, that's probably the risk.
Nice. Looking at some macro trends, rates, regulation, demographics, are any of these affecting self-directed IRA capital flows into real estate right now? And if so, do you have any idea why and what's coming?
You probably won't love my answer. First, yes, all of those things affect IRAs in general and, our economy. My model and my business and self-directing, but also how I invest, is based upon dollars I have right now, and if deals cash flow in today's rates with today's market rates. So I'm a real estate guy. I'm always buying real estate. I'm either holding or flipping. I'm a little different than most. I like flipping more than holding, only because I like cash in the bank account. When 2008 happened to me, I'll never forget it. I felt that I was at 2008. I mean, that was almost 20 years ago. I was 26 years old, 28 years old, maybe 28. And I felt like I was set, 28, and I was worth probably on paper $10 million on paper. Well, and then 2009 hit after all of 8 happened, and I owed $20 million to banks. I went from positive 10 million to negative 20 million. So after that experience, I was like, I'm not after the huge returns. I'm after the consistent, and I'm also after getting. I don't mind lending. I like lending. I like getting paid first. I like getting a pref. I like those kind of deals make me feel more comfortable getting cashed out and then doing my next deal.
Yeah, that's good stuff, Greg. And I can say, guys, that I've gotten to know Greg well enough to know that he has enough experience to be able to give you legit advice here, in that, any investing there's risk, no question about it. And I would say for multifamily over the last 3 years, there's been some pain in the market. From 2012 to 2021, it's been this really kind of nice upward trajectory. And then 2021, early 2022, rates shifted and the pain started to set in because of a lot of over leveraged deals, a lot of bridge loans, just variable rate debt, and a lot of operators that are new to the business. And to manage apartments successfully, it takes work, it takes skill, it's a job. So, with what Greg is saying here, just very consistent base hit returns, base hit deals, that resonates with me. Because when we're looking at multifamily, we've had some home run deals, and we've had some strugglers. Like, that's just the way it is. If you're around long enough, you're going to have some challenges. And for us, what we've found is if you can buy in a really great location, 2000 product, put in a slight value add play, be in a cash flow position day one, have fixed debt, and you've got experience with asset management and great property management, you're likely to do pretty well. Now, if you're buying with variable rate debt in a tough location with a property manager that's new to you, you haven't asset managed a lot of deals, these things can go haywire quick. So I really appreciate that perspective, Greg, and I hope you guys all heard it really clear. So your journey, it sounds like your journey began like with volunteer work in Ecuador at 19. Is that right?
Yeah. I
So
was in Ecuador at 19. Yeah.
what were you doing in Ecuador when you were 19?
It was probably the best preparation for life trip I could have done. It was a church mission. So I went on a church mission. That actually happens to be that my son is going in August. The same country. It wasn't planned that way. They tell you where you're going, and he he's going to the same country that I went to. So I'm pretty excited for him. He leaves in August. But yes, I was on a church mission, and I tell, one of the greatest business things you learn when you go on a church mission is you learn, well, lots of things, but one thing is you learn rejection. You learn how to get back up, dust off your shoulders and keep going, because you get rejected. You just got to keep going, because, and selling religion's not easy, and so did that for 2 years, loved it, learned a lot about myself, and learned hard work, frankly, and really how to be good to others. And so those are, I think, the fundamental things throughout my life that I've tried to teach my kids, but also instill in my business and what I do. So that's where it began when I was 19. Yeah.
I love that, dude. That's awesome. What single piece of advice would you give someone who wants to use retirement funds, to make their first real estate investment this year?
I'd say it's two things. First, I would say nobody cares more about your money than you do. Not your advisor, not me, you. Mm-hmm. Too many people are doing the same thing their parents and grandparents taught them, but expect different results. So the first action is, if you have your wherewithal on real estate, or, understanding or knowing people that are really good at it, take the first step of getting an account set up. Just getting your account set up so there's money in there. So when you get the call or you hear about a deal, you can take action within 24 hours to invest in a deal. I'd say that's the first step that I would recommend, is just taking the action and getting the account set up. The number two, at the same time, is finding an operator that you're comfortable with. And if it's you can do your own, by the way. Like if you're listening to this and you want to fund your own deal, I've done that. I don't do it as much anymore because I don't want to deal with the day-to-day stuff. But you can do that as well. But find your operator, if it's you or if it's someone you know. But those are two things. Take action, find the right people, and start. You just got to start, because that's the big thing I like to share is, I hope that anyone that gets involved with our company makes 2 to 4% more per year than they were before. That's it. So what does that mean? You got to make between 12, well, you don't have to. 10 would be 2% more than you're doing in the market, but between 10 and 14%. If you can do that in your retirement account, you're going to have hundreds of thousands of dollars, if not millions more, than if you just keep doing it the old way. So It's worth it. It will take a little bit of work. And I know this is a long answer to your question, but I would just, it's frustrating sometimes, because I see people's retirement accounts. I've seen my parents' retirement accounts, and there's just a lack of education, a lack of taking action and taking control of your money. And so just making a few extra percentage points more will make a huge difference in your lifestyle. And to me, it's about making decisions, not rushed. And I don't have to rush if I have big accounts. If I got money in the bank and I have money in my retirement account, I don't have to rush.
Yeah, I love it. So anything that you would offer for seasoned investors that they should be considering or looking into to potentially level up, their strategy, if they have done self-directed IRAs before, any other tax advantage structures, or is it really a rinse and repeat model? Once you've done it, it's really find the operator, enter the right deal.
It's really rinse and repeat. The only thing you can add to that is, if you had a lot of activity going inside of your IRA, you could open up a 401k for your business. So if you have an LLC, you can open up a self-directed 401k. We'd help you do that. And that allows you, for individuals that are looking to contribute more money than you currently are, it allows you to contribute a lot more money, up to like $72,000. So if you feel like you're kind of behind the 8 ball, you need to be investing more, but you think you can only put in so much money because of contribution limits, and you haven't been, saving enough, a 401k, self-directed 401k, allows you to contribute a lot more money, up to $70,000. That could be a game changer for you for sure.
Awesome. So as we wind this down, Greg, what's the best way for our listeners to get in contact with you if they want to learn more about Horizon Trust?
Look, the best way, Dan, you've got my contact information. I always like to be referred, to be honest. And so, I'll give my email is Greg Herlean at horizontrust.com, where you can go to our website. But what always is best, like if you want to get a hold of me, reach out to Dan. You've got Dan's information via email, social media, and just say, hey, look, I've, listened to you with Dan and would love to get some more information. It's as easy as that. But my email, or just connect through Dan, and would love to help anybody that wants to learn more.
Awesome. What's your favorite book, to wind it down? Last question. Favorite book that's brought you the most, wealth building secrets or just knowledge through your career?
Ooh, the best book. I actually am just going to share the one that I'm almost done with right now, because I feel like it's always the one that I'm reading now. Is the one I'm reading right now. I literally have like 2 chapters left. Is called "The Obstacle Is the Way," and it's some of the things that we all hear potentially, but it's the journey is the destination, and leaders that are leading teams and or businesses, when they see obstacles, what separates a good leader is how they lead their team through it, and not only lead through it, but excel through it. And I think the best leaders actually excel through obstacles. That's what this book was saying, and I feel like I've done that a lot in my life. There's things I can definitely do better, but it definitely resonated. So yeah.
Yeah, I love it. I got to look it up. I love that answer too. Well, thank you guys all for joining us. Thank you, Greg, for being on with us today. And to our listeners, thanks so much for tuning in to another episode of Keeping It Real Estate. Please do us a huge favor and leave us a rating and review. It helps us continue to bring on great guests and provide great content. And we'll catch you next week on another episode of Keeping It Real Estate.